The Movement to Protect the United National Party convened a media briefing today. At the briefing, views were expressed on the invitation extended to Karuja Surya to accept the party leadership.
සජිත් ප්‍රේමදාස මහත්මයා අපි සියලු දෙනාම අපි යෝජනා කරා පොදුවේ පක්ෂය
Sajid Premadasa and the rest of us proposed that a leader should be appointed who can unite the party. That is why we invited Karuja Surya to take up the leadership. We have got to know that many individuals in Ranil Wickramasinghe's side also like this proposal. Ranil Wickramasinghe can keep the post of opposition leader. However, hand over the party's leadership to Karuja Surya. Through this, all of us will be able to get onto one platform and make decisions to take the party forward.
විශාල තීන්දුව తీරන ගන්න පුළුවන් කියන එක අපි සියලු දෙනාම ඉන්නවා.
Transportation along the Gaul Road was disrupted due to a protest that was staged in the Panadura area this evening. The protest was staged over a liquor license that had been issued.
The protest was staged by the Mahasangha and residents of Panadura and Wadua. The protesters conducted Adhisthana Puja before the statue of Venerable Migettuwatte Gunananda Thera and subsequently arrived at the Panadura Divisional Secretariat in the protest march. Due to the protest stage at the location, traffic along one carriageway of the Gaul Road was hampered. Incidentally, a tense situation arose following a request made by an individual who was affected by the traffic from the protesters to move from the location. The situation was brought under control by the Mahasangha. Subsequent to the protest, several bhikkhus visited the divisional secretariat. Panadura Divisional Secretary Champa Pereira said that it had been decided to temporarily suspend the license in question.
UMP parliamentarian Dr. Harsh De Silva says that a huge interest component needs to be paid as a result of later altering the agreements that were signed when obtaining loans to construct the Hambantota harbour.
A statement given by Dr. Priyat Bandhu Wickrama of the Ports Authority has now caused a lot of controversy about the interest rate on the first phase of the Hambantota port project. The first agreement was to pay 60 basis points above LIBOR. Thereafter, he says, they changed that original agreement and got into a new agreement where the interest rates were fixed at 6.25%. So now, LIBOR has fallen to 0.43%. Now, if we were with the original agreement, 0.43% plus 0.9% brings the interest rate to 1.3%. as opposed to 6.3%, which is the fixed rate. So the question is, why did we agree on a fixed rate when the rates were falling?
Asian stock markets plunged today, extending a global equity sell-off after Wall Street had its worst day in more than 2 years. The Colombo Stock Exchange too joined the trend and closed on a negative note, with both indices recording losses. News First contacted senior lecturer at the Colombo University, Indrit Aponso, for more insight on the prevailing situation.
When it comes to Asia in particular, now see if you look at South Korea, has one of the largest falls today. What I think is, this may not be something where, it is going to prolong, and it may be a kind of a knee-jerk reaction. But later on, I suppose things will come down and get into some senses. But however, the real problem is that with the stock market collapse, there's a wealth destruction, and that can have serious implications on the demand side. With regard to Sri Lanka, I think Sri Lanka is not very much in that league. We are a small market, and we have always been on a different trajectory. And I would not imagine that the Sri Lankan stock market has any bearing on this.
In this economic backdrop where fear has become the major theme, Japan's main index fell 3.7%, while South Korea lost 3.7% and Australia dipped 4% in trading today. Complicating matters was the move by both the Japanese and Swiss governments to intervene and weaken their respective currencies, which were considered the safest in the developed world. Analysts caution that global markets may remain volatile in the coming weeks owing to this and other developments. Early trading in Asia today saw a broad sell-off of equities from across industries. Car makers and manufacturers, which get a large chunk of their revenues from exports to the US and Europe, led declines, with Sony shedding 4.9% and Toyota down 3.8%. The dollar was down 0.4% to 78.83 yen today, a day after Japan reportedly spent a record 4 trillion yen to weaken its currency. The entire world is connected through finance, and what happens in New York or London doesn't just affect that part of the world. So it is important we look at the bigger picture. Meanwhile, News First contacted its bureau correspondents in the region regarding the telltale signs of this emerging crisis.
Asian markets seem to be continuing on their downward trajectory, as was seen today at midday break, when regional bouncers were dragged down by the overnight collapse in Wall Street's key equity indices, and also due to the unrelenting concerns about the global economic recovery. In Malaysia in particular, the FBM KLCI futures contract was sharply lower this morning as it erased 31.73 points to 1,515.16 after opening 16.95 points lower at 1,529.94. Earlier in the week, Asian currencies weakened, led by Malaysia's ringgit and the Philippine peso, on concern a slowing U.S. economy will hurt the global recovery and damp demand for the region's exports. This is Monica Brito reporting for News First from Malaysia.
In the US, yesterday was the worst day on Wall Street since the recession in early 2009, as the Dow plunged 512 points, elevating investor fears about the slowing US economy and the escalating debt crisis in Europe. US traders say that in such a backdrop, investors are throwing in the towel. The major US indices lost more than 4%, with the Nasdaq giving up 5%. Investors fled to the safety of US Treasuries, pushing the yields on the 10-year note to less than 2.5%, while gold and other commodities sold off.
I think the market's definitely telling you the situation in Europe is worse than they thought.
Oil prices continued to fall today as fears of global economic slowdown hit prices of commodities. The prices of both US and Brent crude have fallen more than 10% this week. European markets too have continued a steep sell-off, with investors worried about both the Eurozone debt crisis and the weak US economy. The UK's FTSE 100 index was down 1.9%. Germany's DAX was 1.7% lower, and France's CAC 40 index fell 0.7%. Analysts spoke of fear affecting investments and dissatisfaction about lack of government action as banking shares in London saw heavy falls. But European Commissioner Olli Rehn said he thought the movements were unjustified and incomprehensible. Speaking to reports, the Economic and Monetary Affairs Commission of the EU tried to assure markets by saying the political will to defend the euro should not be underestimated. Concerns about the ability of governments to pay their debts, which has led to Greece, the Irish Republic and Portugal already being bailed out, has now spread to Spain and Italy. Yesterday, investor confidence in Europe was hit after European Commission President José Manuel Barroso warned that the Eurozone's sovereign debt crisis was spreading, sparking fears that Italy and Spain might become engulfed in the problem. Stay with News First as we stay committed to bringing you the latest on the unfolding global economic crisis.